Good evening, everybody. What I wanted to do is kind of highlight the trade on the open this morning for AMD. I refer to AMD as really a free money ticker. It moves the exact same way, responds the exact same way every day, every week, every month since the run up to $200. We're literally trading in the same exact zones and bands dating back for weeks now. If I go ahead and zoom in and I elongate this out over a 30-minute chart, you can literally see where since, let's say, May 15th, we have bounced in this exact same zone, just providing free money to each and every individual trader. But today I kind of want to highlight trading that open. Okay, so I have the extended hours trading available on this chart currently. And what I want to do is kind of highlight for you guys exactly what I saw leading into the open. So a lot of people will trade the open. What I will say is that you do not want to put a whole bunch of money into any trade. Keep it light. Stick with one to five contracts. If you're feeling more advantageous than that, I recommend never trading the open because something can reverse on you very quick. So what we saw this morning was on the market open, in pre-market that is. So when pre-market started, you could see where this gap down and then came down here and then traded along this support level that we had mapped out previously. So right around the time of about 5 a.m., 5:30 a.m., you could see where we try to do some kind of bounce up and retest that level that was now resistance, and then we would do it one more time. So at around 6:25, if I break this down on the 1 minute time frame, I always will trade the open on a 1 minute time frame. So if I'm looking here, I get to about 6:30 is the market open for me. So when I'm looking here, what I want to do is we saw this candle at about 6:27 where it bounced off the 200 day. So we drop back down. This is 6:30 a.m. So what these two candles represent, and I'm going to box this in a rectangle and highlight for you guys exactly what this entails. So this is 6:30. This window of time frame right here is the most crucial part for trading the open. What I want to tell you is this. When I took this trade, I did not get in at the bottom of this candle. Okay, there's a lot of people that say, "Oh, I knew exactly what was going to happen. I blah blah blah." Don't listen to all of that. Ignore that noise, and then follow me through this. If I come in and I have a 1 minute candle, and on the open, I've already moved down two levels. Right, so this was trading when we closed last week. We were at $167. So when it dumped down into this level, this is around 163. That's a $4 move. So anybody that had calls for like 170 range would immediately get liquidated. So what we saw this morning is we saw a downgrade on AMD. The reason why we had a downgrade of AMD is NVIDIA is now trading at a price $40 less expensive than AMD is. So why would you buy a competitor of the market leader at $40 more expensive? It doesn't make sense. So on this run down, the difference here and then here is roughly 50 to 60% depending on which contracts you take. When I trade the open, I always play it more cautious than other people. And so it'd be easy to take a $170 call price strike versus like a 160, 250 or a 165. I will always err on the side of caution because I have seen these things reverse and go the other way than how I took them. The prime example of this is coming out of here. The right decision was puts, but this level of support at 160 has been holding tight for a very long time on AMD. So what you'll see if you've watched any of the other videos that I've taken, you can see these are down trends hitting that support. when you have something that is trading exactly like this is a channel that you want to stay in. This is pushing down, all your moving averages are dropping, and then you can actually see, and many times I reference this as well, this right here is the pivot point. So here's the pivot, here's the run up, right? You trade sideways for a little bit, also known as barcoding, because it has no direction. It's bouncing in this channel, so you never want to take a trade inside this channel. What you want to do is come here and then watch for that breakout. The same way we're looking at it on GME is the same way you're going to see it here. Then what does it do? It does exactly what we just referenced. This is barcoding. This is a no decision. This entire window here is a way to easily lose money due to decay. When you see something like this, though, and we've already talked about 200-day moving averages and we've talked about the different trades. If you see this candle come down to here, anywhere in this barcode, please take a trade that will look somewhat like, the best way to explain it would be, take this trade, when you think about it, the opposite way that your brain wants you to. Okay? What I mean by that is this. If I come in here and I have a breakout down, okay? So let's just say, I'm going to draw this out for you guys. If this moving average was up here, right? And the moving average is coming in. If this candle was reversed, right? I would come here, maybe I break above, and then now I'm going to flush. Okay? So it's the opposite way here. If I come in and I break down here, I'm accumulating, and then as soon as I come off this cross, I'm going to have a very strong bounce. Mind you, these are 1 minute candles. So you're talking about coming back up to 165, which is above the level that we highlighted, right? Where we broke down further than that. If you come here and you look at this level here, we had already blown past that. But if you look at the candle on that open, you could see this is exactly where we gapped down to, and then sellers pushed it down further. So when you're coming in here, next thing you know, you're going to come to this level, and now you can short it the other way. I'm not going to really follow trades to this degree. Usually if I've traded AMD, I'm moving on and I'm going to something else. But if I'm locked in and I want to stay with that ticker for the remaining part of the day, it's very easy for me to come in and then see this movement on the way back down. So going back to the open, what I did was I saw more or less where the bottom would come in here, and I bought 162.50 calls. Okay, so immediately within 2 minutes, these were already above and in the money. But you have to time this perfectly because you're looking at a bottom here, right? And obviously you can't see anything in front of this. So imagine you have a trade, you're in that level, okay? This has absolutely nothing that's going to help you find that support and resistance. You have to come back to here. This is how I knew to take this trade. This level right here, look at, I'm going to highlight this for you just in case it doesn't stick out immediately to you. Look at these two levels. Okay, what did this do? Same thing. Here's your 200-day moving average. It bounced off of it. This level right here is the secondary level where you have to map that out, because that is now going to be your second level, is if it breaks down below this, right? Or you have a little bit of like a squeeze. This was a barcode here. What you want to look for is those no decision zones and find ways to capture those coming out of it. So when you're looking here, it's very easy to see now where that trade took place. Okay, I didn't even know exactly where it would lay out in that barcoded area, but what did it do? It came right here, and I saw where it was at 161.81, immediately goes in the money. These contracts went from, the entry was $3.05, and they went to $3.95 in 3 minutes. I don't know about you guys, but this right here is the perfect way to make your goal, get your 30%, and be done for the day. There's no sense in overtrading if you can make 30% in 3 minutes. Thank you. Have a nice night.